Hello and welcome back to our Python for Finance channel. If you are a subscriber of the Telegram channel, you already saw that we are updating it daily with the profitable option for the stock of the day, let's call it this way, and we'll continue doing that before the platform with the different options will become publicly available, and whoever wants, they can get their premium subscription to it to get full profitable option data, or you can continue still be a follower of the Telegram channel and get one daily stock option pick from there. We stopped at our tasks on task number 19, and today I want to talk about a method of one of the most known and respected investors and successful investors. His name is Warren Buffett, Mr. Warren Buffett, and probably most of you who are interacting with the stock world have heard about him or his company Berkshire Hathaway. So to not get too deep into introduction of the famous investor, let's just check the stock price for his company for the last 20 years. How was the progress of it? And stock class A, historical data, like 20 years. Let's see if we can find. Okay, this was back in 2015, and this is probably 2018 or something. It started with 7,000 and it was to 48 for 40, and now I guess let's check the latest price. Okay, let's check it from Yahoo Finance. Berkshire Hathaway. And what is it? You can see $705,000, and all the history if we can check from 1990s, it was like close to 8,000-9,000, and we can see that it's constantly growing. And what is the strategy of Warren Buffett for, or rather say it's his philosophy? It centers around value investing, a strategy he learned from his own mentor, Mr. Benjamin Graham, and refined over decades. At its core, Mr. Buffett believes in buying wonderful companies at fair prices rather than fair companies at wonderful prices. So basically his approach emphasizes long-term investment in business that have sustainable competitive advantages, or what he calls economic moats, strong management teams, and a business that are simple to understand. Unlike many investors who focus on short-term market movement, Mr. Buffett famously advocates for institutional behavior, like holding periods of forever if the business fundamentals are strong. He has few metrics that are crucial parts of his philosophy. The fundamental strength of the company and potential for sustainable growth are key factors in his investment philosophy. The most important ones are return on equity or ROE, consistently increasing company earnings, low debt to equity ratios, and strong free cash flow. Beyond pure numbers, he emphasizes qualitative factors like brand power, market dominance, pricing power. He has other metrics too, but we basically are going to focus today on those that can be measured and compared. Let's have those metrics listed. Debt to equity ratio. By Mr. Buffett's approach, this metric should be not more than 0.5. That ensures the company isn't overly leveraged, reducing the risk of the company's economic downturns. The current ratio, the short-term financial sustainability of the company to pay off short-term liabilities, which indicates that the company's liquidity is in healthy state. And the current ratio should be within 1.5 to 2.5. Price to book ratio. This one should be less than 1.5. This indicates whether the stock may be undervalued compared to the company's net asset. Next comes return on equity or ROE, which should be not less than 8%. This shows that management of the company is effective in generating profit from shareholders' equity. Basically, it shows that your money are in good hands and managed properly. Returns on assets. Or ROA. This should be more than 6%. This reflects the efficient use of assets to generate earnings. And interest coverage ratio, more than 5. This metric assesses the company's ability to meet its interest obligations. This one also indicates financial stability. Why all of this is important? Because it's been followed by the person who is successful in this field. Basically, if you want to be successful scientist, you'd rather follow to the great works of Albert Einstein or Sir Isaac Newton or René Descartes or Stephen Hawking. If you pursue the career in sports, depending on what sport you are, you'd rather be following the greatest of all times in their segment of field and try to be more like them because, again, they are successful. So, particularly for our case, understanding and applying Mr. Buffett's investment principles is crucial in volatile market environment. His approach provides a disciplined framework that helps investor avoid common pitfalls like emotional decision making and chasing market trends. Market trend is something that whenever you are trying to follow it, it's already gone. So never you should buy something which is on top of its value. You'd rather wait to buy it when it still has potential and it's not the market already booming in all over the world. It's like some sort of hype, and hype isn't proved by none of the successful key performance indicators or KPIs or metrics. So Mr. Buffett's approach is disciplined. Second, by focusing on fundamental business value rather than the market sentiment, investors can build wealth more reliably over the long-term approach. And meanwhile, they will reduce their risk on permanent capital loss. And third, and most important, his philosophy treats investors to act as business owners rather than stock traders, leading to more informed and more rational investment decisions, not emotional. In an era of today, which one of the indicators of it is like very high frequency trading and a lot of market noise, especially in the internet era. These principles offer a proven path to build sustainable wealth through due diligence and intelligent investing. This will be the introduction for today. Let's also create our new file, and while doing the import of our required steps, we will complete it today, but the rest of the code we'll probably go over it tomorrow on our next session. Let's create a file, task 20, implement Buffett's philosophy. And we'll add this to the Git and import Yahoo Finance as YF. Oh, it wasn't saved properly. Let's refactor and rename PY. Import Streamlit as ST. We will use Yahoo Finance for fetching data and Streamlit for visualizing our results. Basically, let's also today implement the criteria that we just wrote. Criteria is equal to debt equity ratio x 0.5. Description potential leverage. We basically implementing all of this as the dictionary, and with the metric and its value we are providing description. So later on, whenever we will try to find out which stocks are matching to our criteria, we will apply to the dictionary values to provide the key and based on it get the value. Next was, let's open current ratio. Current ratio, which is equal to minimum 1.5, maximum 2.5, description, adequate liquidity. Once again, this one is helping to understand if the company's current load with the short-term obligations is not in a very high level and not but it exists and is treated in a proper manner by the management. Next was price to book ratio. Let's do it this way. And that one was also maximum value for it 1.5 and description potential under valued stock. Next was return of equity. Return of equity. Minimum be 8 and description efficient profitability. Turn on assets. Okay. With minimum 6 and description operational efficiency. Lastly, interest coverage ratio, and that would be matching to minimum 5, and description ability cover debts interest. Okay, let's stop here for today, and let's check if we did everything to our values which we decided, our thresholds. Debt to equity ratio less than 0.5, current ratio from 1.5 to 2.5, price book ratio 1.5, return of equity over 8, return on assets over 6, and interest coverage ratio above 5. So we will continue writing our code to get this information from Yahoo Finance to the provided stock list, and also how to display those properly with the help of Python and Streamlit. So stay tuned for continuation of our lesson. We'll catch up tomorrow to finalize this one. Thank you for your time. Stay tuned, like, share, and subscribe to our channel. See you next time. Bye bye.